Well, it's not artificial intelligence, but home builders in the United States have been on a tear, trading near all-time highs. And Mark, you're getting cautious on the space. Mark Sebastian is still with us. We were very emphatic about the tech space. We're looking at retail. Your call is very interesting that now might be time to short the home builders. Why?
Yeah, I mean, you look, the consumer's getting weaker. Rates are going to be high for a while. We've got inflation starting to kind of creep back. And I think that's going to be kind of an issue, especially along the commodity space. You know, lumber, the labor market's really not softening up, especially in the trades. Where, I mean, UPS, they're paying their drivers $170,000 a year. Construction work is not going to be getting any cheaper. How are some of these softer end, these lower end home builders going to be able to turn a profit and be able to sell their homes? Even on the higher end, like a Toll Brothers or a Lennar, you know, there's starting to see some pressure on housing. And here they are, they're sitting right near their all-time highs, just a couple of bucks off the all-time highs. I think there's some significant downside in the home builders. The 200-day is about 70 bucks. I think it could get there relatively quickly.
And in this ETF, it's not just the home builders. You've got the Lowe's, the Home Depot, which also struggled. Yeah. Here you have, you know, the mattress companies, the Whirlpool, so everything that kind of goes into the home. The pushback on the home builders will be, even with that mortgage rate story, is that because rates are so high, nobody wants to sell their home, and people still need a place to live. So they're turning to these home builders because structurally there's a supply shortage.
Oh, there is a structural supply shortage, but you know, I think you're going to see some of these margins get squeezed because people just simply can't afford it. You get a softening consumer. You know, the better play is probably in the apartment building space, things along those lines, because people simply cannot afford to buy. You look at you know, the cost of a home relative to where a 40-year-old's income is, and it is just night and day from where it was even 10 years ago.
Generally in the portfolio, are you kind of net long? Are you increasing your short bets? How's that looking these days?
Yeah, you know, I was kind of short into the beginning of August. I'm playing mostly neutral, kind of pairing things up, trying to find stocks that are kind of long and short against each other. But what I will say is going into earnings tonight, using kind of, you know, using NVIDIA as kind of a proxy for the overall market. You know, the way I'm set up is I am short. But if things go way out of bounds to the upside, I'm going to profit from there. So call it a hedged short because I do think that heading into these earnings tonight, even if earnings, you know, I think we have the spoiled 16-year-old scenario potentially coming to us in NVIDIA. That's the, you know, it's his or her 16th birthday and they get the wrong color Lexus and they throw a fit. That's entirely possible with what could happen with NVIDIA tonight, where their earnings could be, like I said, really good and the stock still gets punished. And I think that could lead the Qs lower, lead the S&P lower, and could really set us up for some softness at least into Thursday's close. I'm probably going to go flat into Jackson Hole. Fed events are pretty binary, although they cause huge movement. They're pretty binary, so I'm probably not going to be taking anything significant into the Jackson Hole speech on Friday.